What's up guys, welcome back to DCA. So what we're gonna do in this video is dive into this recent price crash that we've had. So we went down to around $25,000, but we're gonna dive into the numbers. We're going to be using a metric called the unrealized price distribution. This is a metric which shows us exactly where individuals are holding the asset on the Bitcoin network. So if you buy Bitcoin and you transfer the asset, that registers as a change in price for that asset. So in other words, if I buy Bitcoin at $10,000 and then I move it into an exchange to sell it while we're trading at, let's say where we're at right now, $30,000, that Bitcoin, instead of being a $10,000 Bitcoin, it now becomes a $30,000 Bitcoin because that's when it moved on the network. And I think I've shown now over the last few months that this is a very powerful metric for showing you where levels of support and resistance are going to form. So, there have been several times now where we've seen people calling a certain price level for a level of support based on just looking at the chart, just drawing, traditional price support and resistance levels. However, that's because these people tend to be coming from the stock market. They're stock market traders where you don't have access to this type of data because you don't have an open ledger. So you can't see exactly where individuals last bought a stock, let's say. You don't have a perfect idea of where they're holding the asset like you can get with Bitcoin, for instance, because of the fact that we have the open ledger. So we can see where all of the transactions take place. We basically said that we were going to have quite a bit of support in this range right here from around 40 all the way through the mid 30s. And that sort of played out. We sort of traded in those ranges for quite some time. Now, notice that I'm looking at the 1 month chart here. And we said that if we do happen to lose support, in the mid 30s or the lower 30s, maybe down to 32, you should watch out because the price could rapidly fall below that level. Now, prior to this time, we said that there's simply not a lot of support in the basically throughout the entire 20,000 range. There was pretty much some support down at around 24, 25,000, and below that, there's not really much. So we had support at 28K and down here at 24K. And sure enough, when we corrected all the way down to this support level right here. So what we're looking at, just to quickly summarize for anyone who doesn't know, this is showing us exactly how many Bitcoin are held on the network at each level. So if I point to a price here and like we're looking at right here and we say 30,000, there are about 375,000 Bitcoin held right at that price. Okay. Conversely, if we went all the way up here, right at around 68,000, there are very few Bitcoin there. All right. So that's kind of what this is showing us. Now, if you come all the way down here to the 4,000 level, so back here at this capitulation event that we saw in December of 2018, you can see that there's almost 1 million coins at that level. There's about 875,000 coins still being held at this level. And the majority of these were purchased right at this capitulation event. So that's something to keep in mind. A huge number of coins that were purchased at this capitulation back in December of 2018 are still just sitting on the network. Now, what's interesting about this, when we look at this recent crash that we've seen, where we went down here, it varies from exchange to exchange, but we went down to around 25K. When we look at the data, and we're going to come back to this, but we're going to quickly switch charts. When we look at what exactly happened, so this is the Bitcoin price, and this is a first for the DCA channel. We're looking at a 5-minute chart here because we want to really focus in directly on the crash. Okay, so we're looking when the price went from 30,000 or 32,000, and then we went down to 27,000. We got a small pump up to 30K, and then we eventually crashed down to around 25.5. What we're looking at here is the volume profile visible range, and this shows us that not a lot of individuals bought this dip down here when we went down to the 25.5K level. So this is showing us where the volume occurred. Did it occur, it's showing us over this time range. You can see how much trading action happened at any given price. And this just goes to show you that Basically from the 26.5K all the way down to the 25.5K level, there was very little volume traded in that level. So if we just come back to the chart that we were just looking at, okay, so you can see that this level here, this Bitcoin that's held down in this 24, around 25K up to even, 26.5K, there simply isn't a lot of Bitcoin held at that level. This is about the same as it was prior to this event. So this just goes to show that when you have these corrections like this, it's sort of a twofold situation. Not a lot of people get scared and they don't want to just jump in when we're crashing like this, because the price is going from 30 to 29 to 28 to 27 to 26, and we saw that there simply weren't a lot of people buying at those levels. Okay, so even though we came down to that level for a very short amount of time, we didn't develop a lot of actual support at that level. Okay, so you can see that down in this 25K range, there simply are not many Bitcoin being held there. All right. And if they are, they're being held on exchanges. If you're holding on an exchange, it's much more likely that you're going to sell than an individual buying at that level and moving it into a cold storage wallet. That's kind of what we're seeing right now, that even though we went down into those ranges, we didn't develop a lot of volume, or we didn't develop a lot of coins aren't being held at that level. Okay. At least not in cold storage wallets, because we would have seen that on the network as Bitcoin moving off of exchanges into wallets. But we in fact did not see that. So where are we seeing the volume at then? And the area which has by far grown the most is this range right in here, this 30K all the way down to around 29K range. And you see that now we have quite a bit of volume at this level. So these are Bitcoin that are actually being held at these levels. So they were purchased on exchanges and then moved into wallets. And you can see that we have a significant amount of that now. All right. So right here at around 30K, there are just a huge number of coins. So nearly 400,000 coins. And then you have around 250. So, you have about 1 million coins now, over 1 million coins sitting anywhere from 29K all the way up to around 32K. And prior to this move that we've recently seen, there just simply wasn't a lot of volume in that range. And that's kind of why we quickly crashed right through that area down to this 25K level. I just want to quickly point out one interesting thing here. And that is the fact that if you look down below us, if you look below where we're sitting at now, so this 30K range, you have to go all the way down to around that 20K level before you really start to run into volume again. And these are going to naturally form levels of support and resistance. So if your price is down here and you're coming into one of these zones, let's say that we're coming from 30K. Well, now we have areas of resistance above us in here. Okay, so you can see that there's a lot of volume in here from around 36 up to around 43K. There's a lot of volume in there. And realistically, there's volume in that range all the way up, up into the 50s and above. So when you develop these higher areas of volume and you're sitting above them, so if we got up into this zone here, let's say this 34, 33K zone, and we were coming down, well, we have a support level now. But unfortunately, we're sitting kind of in the middle of the zone. So at the moment, it's acting as neither support nor resistance. We're kind of just in that zone. So we have to make a decision. Bitcoin's going to have to make a decision. Are we going to get above that level and start to use this area as support, or are we going to fall below that level? And here's where the problem arises. If we fall below that level, if there were some other event, another large negative event that occurred right now that sent the price reeling. So you have to imagine when we were coming down to this 25K level, we were, in a big area of support at the time. We were in that 30K, that 32K up to around 38K zone where we had a ton of support. And slowly over time, we just, we're grinding down through that range, and we were just losing more and more support as sentiment was becoming more and more negative. And when the Terra Luna event happened, obviously we were on the bottom end of the range of our support level, and we just crashed down. And like we've said many times on the channel, there's not a lot below you. So there's not a lot to sort of prop the price up. Okay, so that's what sort of caused us to go down so easily to that 25K level. Now, if something again were to happen, and you can't discount that it will happen, and you have to think about it like this. Notice that, these negative events always happen during a bear market. It's when a bear market's already going on. So like the exchange hacks that we saw back in whatever it was, 2013, and then the end of 2017 or early 2018. These events happen and then lead to price capitulations because the market is sort of in a atmosphere where that becomes possible. Because if you're in a bull market, the market will sort of just brush the news off as, something bad happened. Okay, let's keep going with the bull market. But when sentiment is already negative, there's already fear in the market, there's already panic in the market, and then something happens like this, it allows for these massive capitulation events. Okay, so the Terra Luna event, if it was an orchestrated event, that probably wouldn't have been possible in the middle of a bull market, because retail would have been there to sort of pick up the slack from whatever was happening. It would require more money from whoever was orchestrating, that attack on the protocol. But when you're in a bear market, it becomes very easy to do that, because once people see that, UST is losing $1, it's down at 98 cents, 97 cents, 96 cents, panic sets in, and they're rushing on to, sort of get rid of their UST. So it becomes a sort of a positive feedback loop. But that wouldn't be as easy to do that in a bull market, because sentiment is high. Individuals are going to say 96 cents. Yes, please, because they're thinking they're getting a great arbitrage deal there. And so that's why these events happen like this in a bear market. So where we're sitting at now, we're at a very, very vulnerable place. If bad news comes into the market right now, we're vulnerable and could very easily see a slide below where we're at. And when we look at below where we're at, you can see that there is just simply not a lot of volume. So in this area that I have colored green, we take a hit in some way. Then this area right here becomes a danger zone, because we don't have a lot of support. I mean, it's basically just a free fall all the way down to around 20K. And even in that 20K range, there is not a huge quantity of volume there. It's really not until you get down to around 12 or 13K that the volume really picks up. Ultimately, do I think that, that we're going to go just crashing right down through this range through 25K at the support level that we saw recently, and then below that down to 20K? I don't really think that it's necessarily going to play out like that. I think that type of event would that would have to play out in one of two ways. The first possibility would be just a long, protracted bear market where people, they just get worn out, they get exhausted, and they're selling and selling and selling as it just goes on and on. So that type of event would have to take, in my opinion, probably like another year or so. And that's entirely possible. I suppose that's possible. If we entered into a recessionary period in the economy, well, you could quite frankly see the market just sort of drag down to sideways for quite some time. And that's kind of a situation where all it takes is one bad event to happen during that protracted down market, and you could see the market tumble down to these prices. Okay, so that would be the second possibility. The first would be a long, protracted bear market. The second would be something bad happening while we're in the middle of the current bear market that we're experiencing. Okay, so some sort of black swan event like UST, like COVID, like the exchange hacks that we've seen in the past. So if something like that would happen, that's how I see us getting down to the 20K range. Now, if we did go down to those levels, then it becomes a question of, well, just because we go down there, we've seen that you don't need a ton of support to hold the price up. because we sort of bounced right off of this level here, this 24, 25K level. We got to bounce off of that level during this capitulation event. But just because we got to bounce doesn't necessarily mean that, that's where we're going to sit. If you go back to this 2018 capitulation, you see that we went down to, we went down to 3,500 and then closed at 3,900, almost 4,000. But then in the next month, we were as low as 3,100. Okay, so that's another 25% drop or so. These events, just because we've seen a big capitulation right here down to this level and got a bounce, well, that's usually what we see in these types of events. But it doesn't mean that for the next month or two, we couldn't grind down even farther. All right. Now, if it's something like that, if we're seeing just natural market activity and natural negative sentiment, I do kind of think 25K may be where we would sort of bottom out, maybe down to 20K in a worst case scenario. But like we've seen, when we do go down to these levels, and let me mention one other thing quickly. I've seen people, a lot of these quote unquote analysts saying that if we dropped below the prior, the 20K level from 2017, that sort of invalidates Bitcoin. And, these are people that are bullish on Bitcoin, but, they're trying to, demonstrate an air of confidence that we're not going to go down to those levels. Just because this is a prior all-time high and we've never invalidated a prior all-time high from cycle to cycle, I don't think that necessarily means anything. Over time, you have diminishing marginal returns or diminishing returns from cycle to cycle, just, as a law of an asset that's gained over 1,000,000% from its inception to, its peak. As time goes on, it's going to become more and more likely that in a given market cycle, from cycle to cycle, you go down to a prior all-time high. Okay. But it does not invalidate future price action of Bitcoin. It doesn't mean that Bitcoin can't go to those levels again in the future, or that we'll never see an all-time high again. It simply means that market conditions were appropriate for that to happen. So the market conditions were negative enough, people are becoming risk off enough that something like that is able to happen. And that's kind of where we're moving towards a period where we're entering an extremely risk-off segment of this market cycle, because Bitcoin, quite frankly, has never existed during a recession in the economy. That sort of is putting us in a situation where we could see this prior all-time high at least tested. All right. So this is just an interesting way of looking at where we're sitting at now, where our support levels may be. So this is an important price to keep in mind here, this 29.5K, 29K, all the way down to, around here at 28K. But then if we lose that, you're looking back at that 24, 25K level again. Below that, you have 20K. And if things are really bad, if the sentiment is negative enough at 20K, which, I think it would be, I do think it will be difficult for the price to fall below that, but it can happen. And if it does, you don't have a ton of support all the way down to around 11 or 12K. So guys, people take this, when they hear things like this, they get offended or whatever. And you can't look at it like that. As an investor, if you get angry because someone is showing you data, that means you're being emotional, and that means you're already behind the 8 ball. If you are emotional about looking at data and you think something can't happen just because you hear uninformed individuals on social media for months and months and months through a bull market telling you that we're going to 200K and, we'll never go below X, Y, and Z prices, then you're one step behind. Because as an investor, you should be open to all possibilities and understand what is at least the potential. What could we potentially see? And I say this all the time. You want to understand your upside. What's your upside potential? But you also need to understand your downside risk. And that's what we're showing here, because the market is bearish at the moment and we need to understand what is possible. I have multiple videos where I talk about 24,000 being a price target for for, you know, if the market gets bearish enough. And sure enough, we went down to that level. And people were, you know, telling me that this is impossible. That can never happen again. Bitcoin never gets below 30K again. And, you know, I'm going to get comments like that after this video, but I'm just here to tell you that these things are possible and you need to appreciate what actually can happen. And this metric right here, I think, goes a long way in showing us that. So that's going to be it for this one, guys. I'm sorry I don't have better news. You know, the markets just look ugly right now. They just do. Even the stock market looks ugly. At any point, we can get a turnaround. And I think it's ultimately going to depend on what we see the Fed do, what we see the stock market do. But at the moment, until something changes, until something turns around, this is what we're looking at. And, you know, we'll continue looking at this as well as the additional metrics that we look at. But it's kind of where we're at right now. So until next time, guys, as usual, see you.